is obviously real estate professional. Do I qualify? Why is this important? You, as a real estate professional, for tax purposes, there can be a lot of advantages to having this designation. So today we are here to talk about why you would be interested in qualifying for this and how it can really help you. And Christy Seipel is with us. She is the principal and founder of KL Seipel CPA. They're based out of Dallas, Texas. And I'm Kavita Bartake, principal at Cherry Street Investments. Just a quick disclaimer before we get started. All this information presented here is for educational purposes. For your specific tax situation, always consult your own CPA, attorney, or financial advisor, as the case might be. In this case, probably a CPA. Christy is, of course, a CPA and gets this from her knowledge, but for your specific case, definitely consult your own CPA. I'm Kavita Bartake, and a lot of folks here know me. I also see a lot of new faces or new names today, so I'm just going to quickly introduce myself. I'm a principal at Cherry Street Investments. I'm a real estate investor and a full-time multifamily sponsor. I've been investing in single and multifamily real estate for over 10 years. And in my past life, I was a technologist for almost 19 years in IBM and then a company called Atlassian. I graduated with a master's degree from Texas A&M in 2000. I own and manage rentals in Austin, Texas, as well as San Antonio. And also, I'm a passive investor myself in over 2,000 doors and about 650 doors as a general partner, which means I'm an active investor in those. I live in Austin, Texas, and have lived here since 2000. I have a 15-year-old and I have 2 puppies. Our guest speaker today is Christy Seipel. She is a certified public accountant and a founding member of KL Seipel, which is based in the Dallas Metroplex area. She is a licensed CPA that has been serving clients in the real estate industry for over 20 years. She graduated with a degree in accounting from the University of North Texas and worked as a controller in healthcare industry for almost 7 years, the first 7 years of her career. So in addition to general and business tax services, her firm provides tax returns and investor K-1s for syndicated properties, UBIT tax returns for IRA investors, consultation with entity structuring, and she also helps with 1031 exchanges, cost studies, and the whole gamut of things. Her goal is to help investors understand tax matters and help them with their real estate investment strategy, as well as planning for their future goals. With that, I'm going to hand it over to Christy. Christy.
Thank you, Kavita. It's a pleasure to be here. Thank you for the invite. We often get invites to these, and so I'm happy to have the time to come out and talk to many people and share just kind of one pretty popular topic that I get a lot when I have calls from people that are either inquiring about services with us or are existing clients, and they want to know a little bit more about what's going on in that type of industry and status of it in the industry. So I'm happy to be here. And I saw several people coming through that I also know myself, but I saw a lot of new people as well, so welcome. Kavita was just sharing my background, and I've been dealing in real estate for several years, and so I'm pretty familiar with this type of industry, and specifically multifamily, but I also help with those in single family realm as well, and those in brokerage and agents and property management. So I do have several people in my realm that we serve. So I'm happy to be here, and I hope that you get at least something out of this. Some of you may have been already being educated along the way, but hopefully we can cover these topics more specifically, and so you get something out of it. Next. I think the first particular area that I want to cover, it really deals with what kind of real estate activities are going to be covered under the real estate professional realm. And these that you see listed here are directly from the guidance that IRS has released regarding the election. And these are specifically outlined in the election as particular services that you can provide that would qualify you as a real estate professional. And I want to make it clear to those that are listening that this particular area does not demand a licensing. You're not, necessarily needing to go out and get your real estate agent license or your brokerage license to qualify for real estate professional. You need to participate. And these activities here, some of them are very self-explanatory. You have your management, which in some cases is property management. It's maybe management over like asset management type roles. You need to be managing on a regular basis, development and redevelopment, construction. There's a lot of different areas, but in your realm, it's going to be mainly rental, right? And or management. You have probably several people out here, maybe sponsors. Maybe they're actually, have their single family self-rental type thing where they may be self-managing their properties. These particular areas of, these are broad, in other words. These are very kind of top level. When we get into the details, what does that mean? What is it that you're doing? I think for you, this particular area can be more discovered with your CPA as to what you do specifically and where that may fall in these particular activities. Certainly there are some that may be in the realm of development, for instance. Maybe they're working with a developer, but their role in the development may not be necessarily qualifying for those particular activities that need to happen. Maybe they're only a support to it, but they're maybe not directly involved in the development of that property. So it's really good to cover these areas more in detail with your tax professional, because you want to make sure you're qualifying for this election before that election is actually placed on your return.
So, Christy, quick question here. The color codes mean anything?
No, they're just only to highlight the areas. There's no specific coding specifically to it's just only to highlight those.
Gotcha. And what does conversion allude to? I think I recognize the others, but I'm not sure I understand conversion.
Okay, well, conversion could be just that you are actively involved in taking one particular type of real estate and then, repurposing it, if you want to call it that, and changing the use of that type of property. Mm-hmm.
Got it. Okay. I'm sure there'll be more questions, but yeah.
So when we're looking at those particular services, IRS says you must materially participate. Maybe you've heard that topic out there discussed in the different events or even in your own reading and self-learning. Material participation it's in the nutshell, summarized here. What IRS says is that you need to be regularly providing that activity continuously. They call substantially, as a terminology within this code. And I've noted the code here, IRC 469, which is IRS's code for material participation. And it's not just real estate, it covers a couple different other activities. But when they say substantial, that just means, in your perspective of it, this should be going on all the time, right? And so when you're considering yourself a real estate professional and the activities that are going on, do I do that every week? Do I do that every month? Is that something I do all year? Then that's something where if you can say that and your answer is yes, then this may be something you need to review more in detail. The 750-hour requirement is the basis really for this election to take place and to qualify as a real estate professional. So that the minimum amount of hours that IRS views you as a real estate professional would be 750 hours per year, which if you divide it down by a weekly basis is 15 hours a week. And what they're saying to you is that, your activities must meet the minimum of 750 unless you are working in other realms. You could own another business. You might be employed with a regular job and have a W-2. So the scope of their requirement here is that the minimum is 750, but if you have any other activities outside of your real estate, then you must consider those hours as well. And your real estate activities, the hour requirement that you need to meet in order to qualify as a professional may actually now increase to a higher number of hours. And the closer and closer you get to the 2,000 hours or the 2,080 hours, and all of us know out there, 2,080 hours is salary hours that they consider annually. And the more and more you get to that 2,000 hour threshold on your activities other than the real estate, then they're going to naturally say you're not going to qualify, because there's no way you could be doing real estate activities and have a full-time job and meet that same requirement. And what they're saying here is you would have to work 4,000 hours a year, basically. You would have to have 2,000 hours of real estate activity and 2,000 hours of your full employment. So, really what it comes down to is looking specifically at this participation and am I regular, am I continuous, and do I meet the 750 hours per year minimum, and what am I doing outside of the real estate where's my other cash flow coming from, and is it considered active? And so a lot of people get kind of trapped up into this because they think the minimum 750 hours is all that I need to meet regardless. But what happens with, a lot of people who are employed and trying to look to transition over to real estate professional treatment, they were going to have to balance what they're doing outside of real estate to get there. And so it definitely is something to really consider with your professional that you're working with. Now, what they do also say is, hey, if you're meeting the first two and you believe you're getting there, but you're 750 hours a little short, but you have a spouse that also participates in real estate and you file a joint return, then you can use the spouse's hours to qualify for this election. If a spouse is also participating in, say they're only 100 hours, but you're doing most of it, or they're, kind of meeting you halfway, you can then use their hours for this election. And this, I've given you the specific, IRS code that your professional can look back at in determining that material participation for you. Okay. Now, this all being said, you need to definitely consider this area if you can qualify, because this is definitely one of those things where it can release your pass-through benefits. Maybe if you're investing in a multifamily deal and they're generating losses from a K-1, it's going to provide that tax benefit to you immediately in that year, rather than delaying the benefit to a future year. There's also maybe some participation on the management level you're already doing, but you need to get there to 750 hours. And there's some planning probably you can do with your professional to get yourself there to meet that requirement. Maybe there's also goals you have to try to maybe phase out that other type of income that you're participating in currently, and you want to do some planning how to get to that real estate professional area. I think that this particular area is something that a lot of people are interested in, and there are certainly some that can qualify and get there pretty easily, and others are going to really have to do some planning. One thing just to note on this material participation and this particular guidance, only one of the two of you that are filing that joint return need to qualify for this. Okay, so if the two of you are interested in real estate and you're both participating together, but one is full-time and one wants to go to the real estate professional election, definitely be looking and planning with your professional on this matter, because only one of the two of you need to meet this requirement, and again, you can use that participation from the spouse. Next. So how do you apply the election? This is happening generally on that first year return in the year you qualify. Okay, so you think you've met those requirements and you come to filing return by April 15th. There is a, I would call it check the box, but it is a particular box on the Schedule E on the bottom section of the second page that is utilized when you do qualify, and there's information that needs to be filled in there that says this particular part of the individual's tax return is qualifying for the real estate professional treatment. First we just talked about you're meeting that hourly requirement, you're meeting the activities requirement. There's one other thing we need to talk about on this election that a lot of people don't really cover, and sometimes, I don't cover in detail if a person's already meeting that, but there is also another clause in this election that says, if you own, let's take example, the multifamily investments. If you're investing in a syndicated deal for multifamily, what Iris is saying is you need to have, in order to qualify for the election on the multifamily K1 side, you need to have at least 10% in aggregate owned, okay? And so each K1 that you have, whatever that ownership is, you need to add those together and make sure you're qualifying for 10% or more together. If that's not available there, you may not, even though you have the hours requirement, may not be able to apply that to those K1s you're receiving. So make sure you're looking at that as well. How much do I own? And then that's overall that, if you're a sponsor in a deal, you're going to take your sponsor K1 and if you've invested in the passive side of it, you're going to take both ends of those K1s, put them all together. Now, one thing I need to cover on this election also is that your 750-hour requirement that we were just covering, Iris is saying that's per property, okay? And without anything else to this, it says per property 750 hours. Well, what they've also given in there in our clause or in our law is that we're able to apply this election called single interest. And if you qualify for all of the things we're talking about, you will probably want to look at this single interest election. And this election does go also on that first year return. And what it says is I'm going to take all of my rental interest and I'm going to put it in one basket for this qualification. I'm going to apply my 750-hour requirement over all of my properties in one basket. What that does is says now I all I have to meet 750 hours for the year. I don't have to meet 750 hours per property. But absent this single interest election, you're needing to meet that 750 hours per property. Okay, so when you're talking to your professional about this area of qualification, you want to make sure you cover that specific election. It does need to be attached to your return, and it is a separate statement on the back of your return stating that you're applying this single interest election. Next.
Should I go to the next slide? Yeah.
Yes, next. So this is often a question that I get also is how do I document this? What's the requirements for documenting? How do I account for my hours? How do I account for the activities? What am I putting together in my files so that when I make this selection and if for any reason I pull for audit, or there's an inquiry made, how do I support it? I've heard lots of people tell me, some of my prior CPAs even asked me to sign an affidavit and say that I qualified, I'm signing off, and that's what they put in the records. But the affidavit's not required necessarily. What you need to do is definitely make some considerations. And one of the things I recommend when people ask me that is, you definitely want to start with this summary of what it is you do. Okay, so when looking at all these different activities, and you might cross over, and maybe you're managing, and then maybe you're also doing some rentals, single family rentals, and you're doing multiple things. It's okay. We're just coming together and summarizing what are those activities I do, and I recommend being pretty specific on these areas of activities. But you need to be summarizing that, and I recommend it to be in a Word document that you put for the entire year, right? So you have one annual documentation in your file, and the year that you qualify for that election, I recommend a summary put into place that labels all of these activities that you do. And certainly you don't have to say, hey, I traveled to, Dallas to do tour. You don't have to put locations necessarily in this particular document. What you're going to do is line up these particular activities. Maybe yourself managing your single family. And then you're, overseeing leasing contracts. And then you're, overseeing repair and construction contracts. And then, you're maybe you're actually going and collecting rents and that kind of thing if you don't have a property management doing, and you can describe some of those other additional things you might be doing in that management realm. If it's multifamily, then there's a lot that goes into that. It might be that you're part of the due diligence process for lending if you're on the sponsor side, and then you're maybe you're also networking and creating relationships, and then you're you're touring properties and considering acquisitions. And, if you're on the syndicated side, you're raising money and capital for the purchase ahead. And so it kind of gives you an idea. Now, some people say, well, what else can I put in there? But your hours and education does to be count those. If you go to an event, say you're going to a seminar, or you're going to a meetup, or you're going to a networking event, anything that's going to center around giving you that ammunition to continue doing your real estate activities is all counted. Okay, so it's counted in your particular activities for the year. So definitely think about this particular election and take it seriously, because you do want to document this, because it's potentially going to give you all kinds of losses, and you want to be able to make sure you are covering yourself and making it audit proof, right? So list your activities, summarize them, and on top of that, what I have recommended doing is keeping a calendar of events. So on your calendar, you're going to put, touring properties, or if you have to travel to your single family, or maybe you're traveling to a particular out of town event, you're going to put on the calendar traveling to, and what that purpose is. Make sure you're on these particular activities, you're logging something, whether it be on the calendar. I would think would be an easy way, because a lot of people may use calendars just to help keep track of their activities. So if you're doing that, and that's kind of demonstrating these particular things that you are doing. Now, that doesn't necessarily mean that while you're sitting at home and you're looking through all the properties that are available out there and trying to select properties, you don't log those particular things in. But what I'm suggesting is the calendar is then additional support to already listed activities that you've done and summarized. Okay, so it's just another way to substantiate what you're doing, and so that you're demonstrating this kind of regular activities that IRS is wanting you to have in order to qualify. And then also consider timeline. I don't necessarily, it's not required. There's nothing in the law that says, oh, you have to log in your hours. Okay, but if you feel, some people went to that extra mile to keep a time log, and consider it. I mean, I don't think that it's required. I don't necessarily tell everybody that I'm working with, oh, you need to have a time log. But I often get that question: how, if I'm labeling out my activities and I'm doing this calendar, how do I really say how much hours that is? You know, and do I have to say my hour breakdown to say I am doing 750 hours, or I'm doing whatever that number is and above 750? And although that is something that could possibly be asked, but it depends on the auditor you're with. I have traditionally not been asked for a time log. And there's different things that they look at, and one thing is the demonstration of your activities, and that's in that summary you're providing, and then substantiating that calendar of events when needed. But then we also have the tax return and what's going on the tax return and your ownership in those properties, and whether it's exceeding 10%, what is going on your return. And all of that's going to come together for them in this real estate professional election. But the time log is something that you can do to substantiate your hours. If this is something you're inclined to do, or you naturally are doing that, that's something you can do. Put that together. Again, it's not required, but I think that's a way to do it. I think if you break this down based on a weekly basis, and you say I can meet the 15 hours a week for the 750, and I have no other competition, I'm not fully employed, I'm retired from my position, then that would work for you. If you have a job, you're definitely going to have to consider whether this is really an election that you're going to be able to take. Certainly people that are part-time have that opportunity maybe to meet that, because maybe they're 1,100 hours or 1,300 hours working at their job, and so that's probably something they can probably easily meet still on the real estate professional side. Certainly the less time that you have somewhere else, the easier it's going to be to qualify. But when you're working somewhere else, you're going to have to make sure you can, meet that record keeping part of it. And so what I have said to my clients, if you've got that activity listed and you think you're meeting the 15 hours or whatever we determine, if it's 1,300 hours, we're going to say what that is on a weekly basis. If you think that's where you can meet those and you are doing that, then we're just going to document at the top of this particular summary work paper that we have, that's Word document, we're going to put the number of hours and we're going to state it above. That seems to be sufficient in most cases, but yeah, can they ask you for a time log? Certainly, but I don't get that request very often. I'm ready. Next. What are the tax advantages? We talked a little bit about it already. I'm going to go a little bit more detail in this. And we're talking about real estate activities on a professional level. Right now, if you haven't already met that election, you probably already experienced that this is treated as passive. And IRS automatically says any rental activity is passive. It's automatic treatment. So when we get to the real estate professional election, it recharacterizes that income or loss from passive to non-passive. What that means to you is that it no longer is limited in that current year to what we call passive loss limitations. And it is now allowed to offset against your W-2 income, 1099 income, any other source of income that you have, capital gains. The K-1 loss is now allowed to, obviously bring about some true tax benefits in the year you receive them, rather than waiting for that future benefit that you may currently be under if you're not already a real estate professional. Certainly, in any case, if you are passive, one should note that, as you may already know, you're not losing out on the benefit. It's just a delayed benefit to you. But now, being a real estate professional, that benefit now becomes a benefit today rather than tomorrow. Okay. And so the ordering process, if you get more in detail what happens with this, that loss that you're getting is going to first save you on the ordinary tax rate. And that you specifically would need to know by talking to your tax professional and identifying what that true benefit is based on your current situation. A lot of times we're hearing that terminology, bonus depreciation, which is out there a lot in the multifamily realm more than it is single family. And that bonus depreciation usually is going to come in that first year of the acquisition. It can come in the second year for doing CapEx, but the larger of the bonus depreciation benefits really going to come in that first year when they buy the property. And that particular benefit is what we're mainly seeing in that box 2 of our K1 when it comes through. We've got this really significant loss coming through. It's because of that bonus depreciation that we're getting, and that we're able to realize it, right, in the first year, and we actually get to apply it against our other ordinary income. And when we see losses that are in excess of our income sources, that loss then is treated as an operating loss. And what that means to you is that operating loss then is applied to next year, and it does roll forward. So passive investor, it's a different story. They have passive loss limitations, and that passive loss carryover. For a tax or a real estate professional, what we're hearing or seeing now is that this operating loss is now a carry forward into the next year and will again apply towards ordinary income. So you're not losing out on the benefit, and that's a good thing, right, that you're able to do that. And so in the first couple of years, especially for your ordinary income, if you're retired from your job, you're going to see this probably more than somebody who's part-time. You're going to see losses and overall losses occurring, which will then carry forward into the new year.
Is there any specific time that it carries forward?
You're right. It is carrying forward indefinitely now under the new rules. So it's there for you to utilize, and it's definitely going to be utilized in the years that you sell if you haven't had any other source of income that's coming through other than the real estate activity. You can probably see that loss carrying for a few years. So compensation is also an area that we talk about a lot when we're talking about 401ks and being able to utilize 401ks when you're a real estate professional. And in this particular area of the law is if you're not at the retirement age, you're going to be able to contribute more into this particular use of the 401k outside of just rolling your IRA money into a 401k plan. But if you're receiving compensation, which is something specifically that you should talk about with your tax professional when you're talking about this election anyway, because the particular continuous and regular activity, in my point of view, should deem some kind of compensation along the way. And so that conversation should happen with your tax practitioners. But if that's there and available to you, you can utilize the solo 401k. And the solo 401k is only eligible when you have earned income, and you need to have earned income as an independent provider, so a real estate professional qualifies for that. If you have that available, then you're able to utilize that solo 401k. Maybe you have assets that you currently have in an IRA account, and it might even be a self-directed account, which maybe is already participating in real estate. And then if it is subject to the UBIT. And because of the debt financed income, the UBIT tax is an issue. And so if you have ability to create the solo 401k, you may want to consider taking those assets that are currently in a self-directed IRA and roll them into the 401k. Because the solo 401k is not subject to the debt financed income portion of that UBIT law, and therefore you can move away from that particular taxation that you're having currently, and and better manage your assets. The SEP IRA is also another tool that, as a independent professional, can utilize. This in my mind is not something I would put real estate in. I would probably utilize that in some other way as you're strategizing your particular goals and how you want to invest your money. If the SEP IRA makes sense, that also is a vehicle that you can use. The SEP IRA, by the way, can also be self-directed, and it works similar to the 401k as far as your ability to contribute into it. Both of them are going to have a contribution maximum, and they're pretty much the same maximum amounts that you can put into it. But this is something that, as an individual, that would be also a tax advantage to utilizing that. And I find that several who qualify for the real estate professional are actually, seeing the benefit of the self-directed 401k for the avoidance of the UBIT tax. But outside of that, there's some planning that you can do with your tax professional to see whether that really makes sense for you specifically to utilize that. If you do open up one of these accounts and you do have the ability to contribute into them, that is then another tax write-off you get on your tax return, and that's another advantage to being an independent real estate professional. So this is one of those things I probably will hear a lot more questions about as we go, but this is what it basically covers, the areas of topic regarding the professional election.
And I think we have a ton of questions, so I'm just like watching the questions come in. So, okay, the first one's not a question. There is supposed to be sound, and I hope, anonymous attendee, that you can hear us. I think most people can. I think you kind of answered the first question here. What about capital raising, networking with investors, investor phone calls? What about travel time to events? Does that all count? I think it does, right?
Right, that is correct. Yeah, all of that activity is part of that professional status, and that certainly does qualify as hours for the election.
Madhavi, let's see. So she asked something about. I'm trying to understand her question. What's the definition of your income? Is it profit on schedule or something you pay to yourself to manage it? I'm not sure what's the context of this question. Christy, can you see it?
Let me check and see if I can look at that a little bit.
Okay, while you're doing that, the question is, I'll attack a simpler question. Should the 750 hours be evenly spread across 52 weeks?
Well, it does come back to that continuous and regular activity, but there are times during the year where you may have some concentrated time. And a great example would be on the due diligence process, because you're not necessarily doing due diligence all year long, but that particular activity will come, and that may demand quite a bit of hours. And so for that reason, you could still meet the 750 if you said, maybe I'm doing 10 hours a week, and then, mid-year I have this due diligence going on. So the regular and continuous activity needs to occur, but doing 15 hours a week doesn't necessarily mean you have to do that. I just break that down for an easy kind of an analysis of that. But your hours can be more concentrated during the year, and that's fine. You can still meet that requirement.
Okay. All right, John. What if I spend 1,900 hours on non-real estate activities and 750 on real estate? Does that qualify?
No. So if you're 1,900 hours on non-real estate activities, you're probably risking that election because you're nearing that 2,000 hour mark. You need to have the basis of 750 hours first for that real estate election even to be considered. And then what you need to now meet in order to be able to apply the election is 1,901 hours. I recommend not just equaling it, but going above that regular activity. So not to say that you can't do that, and IRS is recognizing that in some cases there may be arguments why you could meet that, but they're seeing this as a natural elimination of your election because you're getting nearer to that 2,000 hour level.
Okay. So the other question is, if I earn as an insurance agent and let's say earn 40K, but my Schedule E profit is much lower, but I have 750 hours in real estate and say 400 hours in insurance, does that qualify?
Okay, well, one thing that you should know about that particular topic is that IRS isn't saying it's all about income in this election, okay? So what you might be having to answer to that, like how often you're working to receive that 40,000. But what would be a good thing to do is make sure that that 750 hour activity level, that you're doing on the real estate has compensation. And when I say that, it's the gross receipts, as you probably already know on your tax return, you're seeing gross receipts from that insurance sale. You need to see some compensation coming from the real estate side. I think that's a better supported tax return when making that election. Certainly does not mean that your 40,000 is going to deem more hours. You can argue still your activity. And certainly it's not going to, that election's not based on what income you're showing on your tax return. It is going to come back to that activity and the hours support that you have. So you can meet that election and certainly consider the compensation.
So what if the compensation is delayed? For example, let's say I'm investing and I'm buying an apartment. Let's say I'm capital raising for an apartment, and most of my compensation is going to be on the equity side of things, and not necessarily, I'm not going to get necessarily compensated a huge lot when I actually buy the apartment. So what happens in that case, because there is a delayed compensation there?
Sure. I mean, there's going to be different ways that these particular arrangements are going to come about. Some are going to be at the back end, as you're suggesting, and the payouts are going to happen at the sale. And you also will have some where there'll be going to be a payout in the very beginning as acquisition fees in some cases being paid out. The real essence of this is, are you getting compensated? And if it is, you certainly, that back end is considered compensation. Your B ownership or that sponsorship, equity that's given out is compensation. So that certainly does qualify. It's a delayed with that, but that doesn't mean that you're not, able to take that and count that as compensation. So it is qualifying.
Got it. So is evaluating visiting property and passive investments considered for a real estate professional, the activities?
Mm-hmm. So the activities that you're looking for the regular is going to have to be something that you're doing on a regular basis. And I know you probably may be managing your passive side of it, or, your portfolio. The portfolio management alone is not going to qualify. You're going to need to do something in addition to that. But if you are serving in some way, maybe it's in self-managing of your single family, for instance, and then you have your passive activities together. If you're participating overall, that would qualify. But doing just the passive management alone is not going to qualify.
Okay. So there's another question. Does IRS believe someone can work 2,000 hours in RE and 2,000 hours in non-RE per year? Is the 4,000 work year considered a red flag? I'm going to say yes, based on your previous answers.
It is, right. And there have been challenges out there where there's been a few tax court cases where they have challenged that particular situation. And if you could substantiate that, you may have a opportunity to win. But that particular scenario is definitely a challenging one to meet and to overcome. And I recommend you really talk through that with your professional. In my point of view, that's probably a delay in your ability to qualify. And you probably need to do some good planning on that and strategize maybe to lower that 2,000 hours, non-real estate hours down before you take that election on.
Okay. I think the next question will kind of cover the next two questions. So I'm going to ask the longer one. I am a full-time realtor and my husband is on W-2. We have passive investments in multifamily syndications and expecting K1, but I don't think we have 10% ownership in the deal. Does that mean we cannot take benefit from it?
That is correct. And make sure to note that this is all the K1s together. So if there's only but one K1 out there and it's below 10%, then certainly that doesn't qualify. You won't be able to apply the election to that.
So 10% of what exactly?
10% of ownership in that partnership. So these are multifamily syndications where you're receiving a K1, your ownership in all of your K1s together must be 10% or more. Okay. So if you have one K1 and it says 8%, or, that means you're putting quite a bit of money into it, then you cannot apply the real estate professional to that K1.
So let's say, taking an example, we have a $10 million deal, and obviously the 10% would be, is it $10 million of the entire, is the property has to be $10 million and it's $1 million of the deal, or is it just the, like, let's say 30% of it is your down payment, and it doesn't have to be 10% of the down payment?
Right. What we're referring to here is of the syndicated funds. So
Okay.
Your equity is awarded to you based on the syndicated funds that are coming in and what that realized amount is based on contributions. And that's all coming back to when you sign that subscription agreement and you're putting in how much of that ownership you're going to receive of that. And so 10% is a factor that also is shown on your K1. It's demonstrated on there what you have rights to for profit, loss, and equity. And so if that demonstrates anything less than 10%, then you will not be able to qualify.
Okay. So there was another question about part-time. Someone is not part-time, but they have over 1,200 hours in real estate and 1,200 hours in their full-time job and over 750 hours in real estate. Would that qualify?
If you have 1,200 hours in your full-time job and that full-time job is not real estate related, then you are not able to qualify. You need to have, in this particular case, 1,201 hours to qualify for real estate professional on the rental or real estate activities.
So I think he said 1,200, over 1,200 hours for non-real estate and over 750 for real estate. That doesn't work?
Right. So
Okay.
you need to match that non-real estate hours.
Okay.
So you'll need real estate hours to be 1,201 hours to qualify.
Got it. Got it. Okay. Can you get this designation for consulting services to real estate companies and investors who are engaged in work that qualifies?
Good question. Depends on what the consulting services are about. I think that if you're in a development area and you're a key part of that development strategy, that possibly could. If you're just only a consulting firm and you're separate from that activity, so you may not be able to get there. So I think that is something to really look into as to what exactly are you doing, and whether that can connect to one of those activities that we're just covering in the very first slide.
In case of joint qualification, the one that is not working W-2, does he or she have to be more than 50%? I don't know what it means here. 50% of the income, 50% of what? I don't know. They haven't asked.
Well, let me just cover the joint qualifications. So I'm already kind of alluding in your question that one of the two of you must qualify for the real estate activities and the real estate professional treatment. So whether they, I don't know if you're asking me whether they need to be 50% active and being participant at least 50% of the time. I think generally what they need to be doing is those activities, and that those activities are regular and continuous activities. If they are, and their hours is lower than 750 and you have participation going on, they can certainly borrow those against that in order to qualify for it. But they need to be doing regular continuous activities. That'll be the grounds for the election.
Okay, I hope that answers her question. She'll ask more. There's another interesting question. If I'm managing commercial property for the last 2 years and I own 10% share, can I hold the real estate professional status?
Yes, that definitely would qualify, as long as you have 10% ownership in that particular commercial property. Then that's definitely qualifying.
And the 750 hours, right?
And the 750 hours, right? That's
right.
Definitely a need.
And even if they have a full-time job, they would still qualify?
If they're full-time and they're managing commercial property, so that you're full-time in real estate already. Okay. So as long as your job is real estate related.
No, let's say they're full-time in a W-2 job, because I know this particular person and I know he's full-time in a W-2 job as well.
Okay. But it's not real estate related.
Correct.
If it's a non-real estate related W-2 job,
right,
and you're managing commercial property, then you need to have your hours in that commercial property be equal to or more than your non-real estate job. And if you're full-time, then we're coming back to that same kind of troubled area.
Right. Right. So if you're doing 2,000 hours in a non-real estate W-2 job, then you have to do 2,001 hours in real estate to actually get there, right?
Yes. And then you also have to understand that that's a risky area, because IRS will challenge that.
Right. Right. Okay, this is very interesting. I had a lot of questions here. So if someone was a part of a syndicated commercial property deal as a deal sponsor, and the deal involved a lawsuit where the Class B shares in the deal are rendered useless, is there any type of tax write-off or credit that can be claimed to offset the loss in the value of the Class B unit shares? Interesting question.
Yeah, it's a very interesting question. I think that the short answer to that is there is, but that what that value is going to be definitely something you'll talk to your tax preparer about. In some cases, that B units are no cash in, and so it's really representing the value of what you put into the deal, and that might be personal guarantees, that might be service time. So the rule around that and what you're going to get, what the value will be of that particular scenario is something you need to talk more in depth with your professional about.
Okay. So coming back to the other question about the 10% equity, that means that most people passively investing in bigger multifamily deals may not qualify for gain losses because they don't have 10% equity on those deals. Is that right?
That is correct. Unless you're able to aggregate them all, if you've got like say 5 deals and each of them have 2%, you would get there, but you just need to look at what your total investment is in that before you can determine whether you qualify or not.
Got it. There's a lot of questions here, so I'm trying to figure out if we can get through all of them. I know it's 8:30, and thank you guys all for questions, and thank you, Christy, for staying on. Does passive investment in multifamily qualify? I think we have beaten that to death. It can qualify under certain conditions. I'm a passive investor in 28 multifamily syndications, and I'm a key principal in 12 of those. My CPA says since I'm LP, I cannot count those hours in a 750-hour requirement. In the 750-hour requirement, I'm significantly involved in acquisition and due diligence. I also manage 5 single-family properties. Would I qualify?
In my point of view, that would definitely qualify. You're going to need to, that certainly is more detailed conversation, but what it sounds like to me is if you are participating at some level with those particular LPs, okay, because the rule says on the LP side, that's needing to be 10% or more. And if you're saying that the LPs are more than 10%, then you certainly could consider that as part of your real estate professional, qualifying losses. You need to discover a little bit more about that, I think, but that certainly sounds like you have enough there to apply that election. So.
Okay. So this is an interesting question, a little twist. It says, what if I have 1,300 hours part-time non-real estate activity and do 1,100 hours in RE and spouse, stay-at-home spouse without any income does 300 plus hours? Should we be okay?
That certainly sounds like it is eligible because you'd be able to take those additional hours to get above that 1,300 hour requirement.
Okay. There's a lot of the hours thing. Is 1,500 hours non-RE and 1,501 hours of RE likely to pass IRS? It just keeps going on and on.
I know, right? I think it definitely could. It is, really going to come back to you being able to substantiate that. But I do think that that's definitely. I have several clients that are like around the 1,300 hour. Maybe doing some part-time work in the non-real estate, but then can demonstrate, working 1,700-1,800 hours on the real estate side. I think that you could qualify, and that's something you could argue that's very achievable. That does mean you're awful busy, but that's achievable.
Okay. So there's a lot of questions around that 10% rule. I think generally folks are really confused about that 10%. So, is that cumulative? Like, does it have to be 10% in one property or 10% aggregate across properties?
It's aggregated total, right? So your overall ownership in all of those LPs together, if you were to consider them all together, must meet 10% or more. So you can have, I demonstrated earlier, 5 different investments, each having 2% ownership, and they meet the 10% rule together. Okay, so that is an aggregate view.
So is there any app for maintaining time log? Like we use Google Calendar for documenting all meetings. Do you have any recommendation for an app?
Yeah, I mean, certainly you can use any time log app out there. There's not anything that's going to be really tailored to the tax professional, in my knowledge. You certainly could use Excel. You could, um,
I think
whatever
realtors
works
also
for
use
you.
some logging tool. Like I forget, there's an app which a lot of real estate professionals, like the realtors use just to track time. So
Mhm.
I think you could use any of those. No specific app. If you don't have sufficient real estate losses to offset ordinary income, rental income is actually more anyway for the year. Is it worth it to be real estate professional?
If the losses are exceeding, well, let me understand that question. So you think that your losses are exceeding your income for the year? Well, if that's happening, you're absolutely not paying in any tax unless we're in a situation where there's some earnings tax there, self-employment tax, as I would call it. Um, but that's saving you the ordinary taxation that you would otherwise pay. If you're in a situation where you're not paying tax anyway, before the consideration of the election, and that comes and maybe because your income sources are exempt from taxation. Maybe you have tax exempt interest coming on, or reporting every year. Maybe you have Social Security income along with that, and if those are the only two components, you don't have a taxation. You're probably not going to benefit from the real estate professional election. It's just going to create losses that will just keep rolling forward until the year that you actually have gains. So, and that's at a 15% rate. So that concept, probably would talk a little bit more with your professional about. Certainly the one who sees your tax returns on a regular basis could answer that a little more in detail.
So there are just so many questions here. I can't keep up. It seems like I'm going through and I'm getting more questions. So I still have 19 here. So I don't know if we'll go through all of them today, but this is an interesting one. If I own 100% of 3 single family homes and then 1% in a few syndications in LP, does that satisfy the 10% aggregate property requirement?
Okay. Well, what I would say to that is that on the LP side of it, in order to apply those K1s that you would have to the real estate professional election, you still have to have a 10% aggregate there on your K1s. So your overall ownership meets it, but those particular K1s aggregately need to be 10% before you can apply the election to the K1s. But you certainly would be able to apply them all to your single family side.
So this 10% qualifications runs every year, right?
It is. It is an annual requirement, yes.
Okay, so more questions on the 10%. It seems like everybody's thrown off with the 10%. So
Uh-huh.
I think I am as well. Can we go back to the 10% ownership question? What if I'm the sponsor and my equity, the deal is less than 10%, but my share of the profit to do to promote exceeds the equivalent of 10% ownership equity? Can I use this property?
So in this particular case, are we talking about a special preferred return, or is this something where you're getting ownership and B
Ownership.
units? Okay.
Ownership. I think he's on the sponsorship side, so he's getting ownership in the property, and with that he's exceeding 10% of the, because of
Mm-hmm.
the splits, he's going to get more
Right.
than 10% of the deal.
Yeah, no, certainly that can, because you're going to get your sponsor ownership on the B units plus then your A units combined exceeds 10%, then that does qualify.
Okay, there's more. I think we've beat the 10% to death here, so I'm going to skip the 10% questions. There's more about 2080 hours in W2 job. We answered that. So you cannot work 2080 hours in a W2 job and put 750 hours for RE, so that won't qualify. See what else. Is there anything interesting here? Can operating losses not be carried back up to 3 years to amend and obtain refunds? Can operating losses be carried back up to 3 years to amend and obtain refunds?
Unfortunately, our tax reform rule in 2018 took away our carryback. So if there are losses that occurred in the year of 2018 or any subsequent year, you're not going to be able to do that carryback. However, if you had losses from 2017, that would have been eligible for it, but not under our current tax reform.
Okay. So a question here is, I own two companies, one multifamily and one not related to real estate. If my income is very high from my non-real estate related business, will that create a problem? I still spend more hours in multifamily than the other business, but my income is higher from the other business.
Okay. Well, it certainly comes back to what's driving that, and how many hours are you. If you're not participating, like you said, in the non-real estate as much as you are on the real estate side, the compensation might be in a scenario. Let me just give you one. Say you're an owner in a company, and just because you're an owner in the company, they're compensating, but you don't have the hours and activities just because of ownership that you're getting compensated. Certainly, that's not going to kick you out of being able to apply the real estate professional election, because you will be able to substantiate the hours. I always like to say, let's look at that compensation and make sure that we are generating some compensation on the real estate side, so that we are able to argue that there is also compensation coming from that side of the business, and your activities are demonstrating that. But it certainly comes back to, first, if you're already participating more on the real estate than you are on that position, even though they may be giving you compensation for whatever that reason is, as long as it's not taking away from your your ability to substantiate the real estate side, that it's going to happen year to year. You're going to probably see one year you're going to have real estate losses and have income from the outside source. So it's not going to kick you out of having that election take place. You just need to probably document some things and make sure you can support the real estate part.
Okay. Yeah, I think Madhavi is asking some question, which I'm very confused about, because it seems to be fragmented. To have regular compensation, if I have LLC and it's not taking a significant distribution, is that a disadvantage, or doesn't it matter because I will still utilize solo 401k benefit? I don't know if you can understand that. I don't. Okay.
This
Sorry,
particular area of regular compensation that you're getting from the LLC, you don't need to take distributions out of the LLC. You just need to show that the LLC is getting compensation, and I'm assuming then that means you're owning in that LLC. And is there disadvantages? No. So the LLC, getting compensation inside the LLC is needful in order to use that solo 401k, if I'm understanding your question. So you do need some. The LLC does need to receive income, and receiving that income then qualifies for that solo 401k. You don't need to take distributions out of the LLC to qualify for that. You just need to show that the LLC receives compensation in which you own it. Okay, so you need to be owner of that LLC to make that solo 401k work.
Okay. So there's a question about 10% again. My question also pertains to 10% or more. If I own 100% of a 40-unit multifamily property myself with no partners, will this count towards the deductions for small percentages I own in other passive syndications as well? I am not sure I'll get a K1 for my 40 unit since I have no partners. So then it doesn't count according to what you said, right?
Mm-hmm. Right. So your 40 unit would definitely be qualifying, but those other smaller percentages will not.
Okay. Then there's a question about general partner and 5%. Does that meet the requirement? Yes, as long as you get K1s, it meets the requirement. Okay. So I'm trying to see any other questions that look different. Question, Christy, do you service states other than Texas? I need a new CPA.
We are definitely serving several states. We provide multi-state reporting. We have a client that does 46 states, so it forces us to know state law. So certainly we can support in other states other than Texas.
Okay. So if you elect as a real estate professional in 2019 for the first time and you have passive losses from the previous years, can the previous and the current 2019 year offset income for 2019?
That's a good question. I have to remind people of this when we're talking about it. The history is still treated the same way. So if it was passive, it's still passive, even though you may qualify this year for real estate professional. So you're not unlocking those historical losses, but you are unlocking those current losses. And the historical losses will still be there and eligible to apply towards any income you're receiving, such as a sale of that property and the gains that may come from that sale. Then you will see that release. There's other ways that can be released, but that would be one of the examples. But it's not going to unlock all those historical losses immediately.
Okay. I'm going to skip a bunch of questions because we are so out of time. I kind of knew this would happen, but I didn't realize it would run over so much. But Christy, I think I'll ask a last question because this is an interesting one. Did your clients get audited by IRS in REPS status? And if so, how did you support them? What's the likelihood of being audited on a REPS status claim?
Okay, that's a good question. It's a fair question. I've had only but 2 get audited out of that particular realm, and there was no changes on those particular ones. Now, what certainly comes back to that documentation and being able to substantiate, and that is a client by client discussion, that needs to be had with the professional before, and thinking ahead. It's one of my thoughts to, if you're going to do this, you really need to talk about those particular things in the year that you're planning on making that election happen for yourself. So you're knowing what those risks are, but your chances of being audited, and this is just coming back from just the knowledge of what's going on with IRS and their internal staff. Your chance of getting audited in this realm is probably still, less than 10%. Their ability to audit people anyway at this point is just based on their staffing and the ability to send educated auditors out. So they end up training a lot of their auditors in the audits themselves as they're out there in the field. So, your chances of being audited is probably going to be just as many, as anybody else. It's the percentage is going to equal just about as anybody else. They're going to start with national averages, and that's one of the ways that they select. And so, if you've got the preparer talking to you along the way, you certainly can, be in the know or whatever if there's any kind of risk that might be happening on your return that year. But your chances are going to just be as good as anybody else on that. I don't think that, the real estate election itself is going to trigger an audit. But certainly you want to make sure you document.
Okay, I think with that we're going to wrap up. There are more and more questions coming in, but it's 20 minutes past the time we are supposed to be finished. So thank you all for your participation and your questions. Christy is always available. Christy, do you have any contact information to share with our viewers today? So they know where to reach you, or if they want to consult.
Well, there is definitely a few ways that you can reach me. I did put my email on the front page of the slide here. Another way, a good way to do it would be just to schedule a call with with my assistant Jamie that's in the office. Our website, you can get our contact information from the website. and it's kaleseipelcpa.com. You can go out there, and there's a contact us page that gives you some contact information. You select that. You certainly can, reach out in a few different ways, email or call. It's probably best that you include my assistant Jamie in that correspondence. If you post your question on the website, it will come in to us, and Jamie does filter that along with my operations manager. So that question will get to us, and we'll be able to answer it.
Okay. Awesome. Thank you so much for your time, Christy. I really appreciate it. And thank you everyone for joining today. And that will be it for today. You have a
It's my
great
pleasure.
evening. Thank
Thank
you,
you for
Christy.
the invitation. You guys have a
Thank
good
you.
night.
Bye. Bye now.